Consumer prices rose 3.1% in November compared to a year ago. That was slightly lower than the month before, showing some progress in the fight to reduce inflation. This new data from the Bureau of Labor Statistics comes amid the Federal Reserve's final meeting of the year, and its decision to whether or not to raise interest rates hangs in the balance. ABC News business reporter Alexis Christoforous joins us now for more. Alexis, break down this CPI report today. Where are consumers seeing relief, and where are prices still stubbornly high?
Well, first off, I just want to take a bigger picture and step back for a moment, Elizabeth, and look at where inflation was and look at where we are. Remember back in June of last year, inflation was at 9.1%. We were paying more for just about everything. 18 months later, it is at 3.1%. Remember, the Fed's target is 2%. So there is some work to go, but we are seeing relief in different pockets of the economy. Gas prices, a big reason why the pace of inflation has slowed recently. Gas prices down 6%. Year over year. That's a big relief for folks as they go to the gas pump. Other things we're seeing a little relief on: clothing down about 1.3% over the past year, but we're still paying more for some of the essentials, right? The basics like food overall up slightly year over year, and rent, which is a huge piece of all of our budgets, up nearly 0.5% year over year. So again, it's a mixed picture on inflation. I think it's sticky or hanging on in certain areas of the economy. We're getting a little relief in others.
Right, and given that it's sticky, Alexis, we know that the Federal Reserve is meeting. It's kicking off that meeting today, expected to issue its decision tomorrow. What kind of decision are we expecting here, given this inflation data?
Well, the Fed hasn't come right out and said they're done raising interest rates. I mean, they've raised rates 11 times since last year to bring inflation down. It is working. Some might say working painfully slow. But given the fact that this inflation report is overall tame, the fact that the job market is solid but not gangbusters the way it was last year, consumers are spending but not as strong as they were, the economy seems to be avoiding a recession, all of that gives the Fed a little breathing room. So they're expected to leave interest rates unchanged tomorrow. That would be the third straight time they've done so. And some folks are even saying if inflation continues in this direction, we could see the Fed actually start cutting interest rates by next spring.
Next spring, that would be a big relief for your mortgage, your credit card. We will see if they signal that. Alexis Christoforous, thanks so much.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.